Hello and welcome to the PM200 MACD method. Disclosure: Bull Bear Profit employees, management, coaches, and owner are not licensed financial planners or consultants. All stocks in the material presented today are for educational purposes only and not recommendations to buy or sell any financial instruments. PM200 MACD. This video tutorial explains the Bull Bear Profit method PM200 MACD. Make sure the indicator settings on your chart are correct, and these method indicator settings are for TC2000. Here is the TC2000 paid version, and this is the free stock charts version as well, and this is the link to freestockcharts.com. So these are the settings that you'll use for the MACD indicator. The agenda for this tutorial is we'll first cover what is PM200 MACD, what is the ultimate result or objective of the method, what is the purpose of the method, and action steps for the method. Section 3 covers definitions and concepts, reversals, MACD bars, equal or more and opposite. Qualifying, Section 4 is qualifying a stock to be a candidate. Section 5, extreme momentum and when to trade. Section 6 are covering stock candidates. And Section 7 is the Bull Bear Profit trade rules. So to start, what is PM200 MACD? PM200 MACD is a bull bear profit method taking advantage of a stock during times of extreme momentum, also known as extreme emotion. The PM part is power MACD, and MACD is a momentum indicator and stands for moving average convergence divergence. The 200 part is the percent movement the bars on a MACD graph must move in order for a stock to become eligible to trade. So the MACD bars explained. In the bull bear profit world, MACD is the emotion indicator and measures the momentum of a stock with vertical bars, as shown here. So MACD bars increasing in height equals increasing momentum. This would be an increasing momentum. Price would be moving up here, and vice versa. Whenever the bars would be coming down, just illustrated here, just starting to come down, then the momentum would be decreasing. Bar values over here become positive or negative if the bars are below the midline as pictured in the graph below or on the right. So this is the bars, that's the midline right here. This is the zero line. So whenever bars are below this line, of course we're in the negative numbers, and if they're above, we're into the positive numbers here. The bar graph on the left shows bars with increasing height, indicating increasing bullish emotion / momentum. Equal or more and opposite. So now that you understand MACD bars, the next step is to understand the 200 part of PM200, or equal and opposite bars. So if we look at point A to point B, it's a 200+% move. Point B is at least equal or more and opposite of point A. And that's it. That's the equal and opposite 200% movement. So measuring the bars here and increasing up to this point, that would be a 100% move. And of course, if it keeps coming up, we get up to 200%. Only when the movement gets to at least 200% does it become eligible to look at as far as extreme momentum. Here, point A to point B is 211.01%, as indicated in green in the data box right here. And this, by the way, is an example using the premium or paid version of TC2000. Example 2 of equal and opposite bars. So here point A to point B is 223%, indicated in the green box here. Example 3 of equal and opposite bars. Here, point A to B is negative 200% as indicated in red in the data box. So in measuring from here down, of course it's 200.29%. Its equal and opposite can also go bullish to bearish, which is illustrated here. Bullish up here and it goes down to a bearish move. Point A to point B is 200+%, and point B is at least equal or more and opposite of point A. I think that point is driven home here. So what, section 2, what is the result or objective, the purpose and action for PM200/MACD? The result that we're after is for the PM200 MACD is for quick profits with targets of 1% or better. We purposely are not trying to hit a home run and trying to get 20%, 30%. There's a lot of problems with waiting that long for a stock. There could be a number of things that can go wrong waiting for that high of a percentage. That's why we're going for quick profits with targets of 1% or better. The purpose to maintain consistent timely profits at easily obtainable targets with zero to minimum losses, which is zero to minimum losses, of course, as a reminder, is the #1 objective of bull bear profit trading. The action. The plan for the PM200 method is to qualify a stock to become a candidate, which we just covered. Trade the stock strictly obeying the rules of the strategy, and don't lose your profits. The detailed action steps are on the next slide. This is very, very important. Use an easily obtainable profit target around 1%, which is the target and rule for this method. I mentioned around percent. Of course, it could be a little bit more, but we want quick profits like easily within a week or two. Definitions and concepts. So part of the things you need to know is what is a reversal. So a reversal defined is when the trend of a stock reverses in direction. A reversal has 3 bars. These are the 3 bars. The middle bar is the longest, and the 2 bars on each side, A and C, of the middle bar are shorter in length than the middle bar. So here, as it explains here, middle bar B is longer than the left and right bars C, and that technically is a reversal. From a bullish trend, it goes bearish. So we call this a bearish reversal, and the opposite is a bullish reversal where the trend's coming down. That's the reversal, these 3 bars, A, B, C. And it indicates the trend is starting to go up. Section 4, qualifying a stock to be a candidate, and the overall plan is outlined below. Step 1, find stocks reaching new highs or new lows for MACD. Step 2, expand the stock graph to full length and eliminate the noise at the beginning of the graph. Step 3, note which trend the stock is currently in, a bull or bear. Step 4, perform A or B below. If a stock is in a current bear trend, find the most extreme bullish peak in the entire time scale. If a stock is in a current bullish trend, find the most extreme bear peak in the entire time scale. Step 5, enter the trade on the first reversal at completion of the reversal bar, which is 3rd day at the end of the trade at 12:59. The reason I say 3rd day here is if you're, for example, using a 3-day chart. If you're using a 1-day chart, then you would enter the trade on the first reversal at completion of the reversal bar, which would be the very next day if you're using a 1-day chart, and at the end of the trade day, 12:59 p.m. So this is what you first do here, qualifying a stock to be a candidate. Steps 1 and 2. First, scan for stocks reaching new highs or lows for MACD. Step 2. Expand the stock graph to full length and eliminate the noise at the beginning of the graph. So what this particularly is talking about is this is what we call the noise, the initial lowest low, and then we wait till the stock comes down and comes back up bullishly and comes back down to baseline. For every stock, it's kind of like a sine wave, and you wait till it completes the sine wave. This is where we start to look for extreme peaks from this point forward. This we consider noise here, and you can tell when you expand a graph as big as it can get time-wise. You always have this dead space where there's nothing at all. There's no data to start creating MACD. So this is initially, it's just not reached a level of where the bars start becoming accurate. This is just initial data. So we'll start right here. Eliminate initial highs, highest highs or lowest lows. That's the initial lowest low, and this is the initial highest high. Qualifying a stock to be a candidate, step 3. Note which trend the stock is currently in, a bull or a bear. Now step 3 is very simple. Just go to today's stock graph and observe if the trend is bullish or bearish. Obviously in this example here, we're in a bullish trend. The MACD, this is price, is moving up, in other words, and MACD is following that momentum, is going up, and it's getting steeper. So of course the momentum is getting steeper, the emotion is getting steeper. And then in a bear trend, when price falls, MACD falls as well. Now step 4, perform A or B. If a stock is in a current bear trend, find the most extreme bullish peak in the entire time scale. If a stock is in a current bullish trend, find the most extreme bear peak in the entire time scale. And we'll go to the following slides to explain the momentum. Extreme momentum is very important. That's part of the key to the bull bear profit strategy. So here in point B, if the current momentum is bullish, find the most extreme MACD peak opposite of the current momentum bearish over the entire time scale. So this is doing the PM200, but what we're looking for, we'll start, it's real simple. Let's make this simple. This is the entire time frame we're viewing. Okay, we eliminate the initial noise, once again from here up to here, and we'll start, that's in the biggest peak, bullish peak. So we'll start measuring from this point forward, and literally we just quickly look and find the largest, most extreme bearish peak, which is obviously right here. And this is as of this date, for example. Don't have the exact date here, but we're just giving an example of viewing the entire extreme momentum of the MACD and when to start measuring it is important. So from this point on to this point is where we're looking to have the current PM200 move. So if the current momentum is bullish, find the most extreme MACD peak opposite of the current momentum, and that is point B right here. This is opposite of the current momentum. So read the green note on the graph, which we did. Important, after you have scanned for stocks with new highs or lows from MACD in the chart above, it is a new high. Find the most extreme MACD below the midline over the entire time frame. The current MACD value must be equal or greater than the most extreme MACD value opposite of the midline. If this condition occurs, you have a stock graph candidate. And of course that occurred right here. So step 2, equal or more and opposite. The above graph illustrates the most extreme momentum opposite of the current momentum B. So if we have here, point A is the most extreme MACD bar in the entire time frame and has a MACD value of -2.32. Then if you look up to B here, the point B is equal or more and opposite of point A. B is the current new high value of 2.83. And we want a value of at least 2.32, and it exceeded that to 2.83. And of course it says here it is exceeding the value at A, which was negative 2.32, which equals the white vertical line right here, and B is equal or more and opposite of point A. So that's what we're referring to over here. So that's where the stock becomes a candidate, is when the MACD value exceeds a negative 232. It's got to go at least 2.32, and of course it did. It went to 2.83. The graph above illustrates the first time the MACD bar, the white vertical line, is equal or more and opposite than the MACD bar value at A. The total movement is over 200%. And that's right overall here. And then we look for the first reversal. So trade on the first reversal. At the time of this writing, a reversal has not occurred. The graph below is a different stock than on the previous slides, but illustrates the first time a reversal occurred after meeting the equal or more and opposite requirement. So in this example, PM200 MACD candidate rule. Enter the trade on the first reversal at it's 12:59. I start looking at about 12:50. Is because I want to trade at or near the close of the trade day. So usually about 12:58 to 1 o'clock Pacific Standard Time is when we make a trade. And also when the bar is complete. So for the stock above, a short trade would be placed on February 24th, which is showing an indicator box here. This indicator information, this data, is all what this vertical line is pointing to. So we would short the trade, would be placed on February 24th, 2015 at 12:59, and the target was hit quickly. So there's the first reversal, and all of this here is profits because we're doing a short. Remember, when a stock is moving up in a bullish move and it has a reversal down, we're going to make our profits on the way down, or when a price is falling. Stock candidates. To increase the probability of your stock hitting target sooner, make sure the stock has these qualities. 1. The PM200 MACD qualifier is a first timer. It's the first time that you're viewing a stock history that it hits the PM200. Number 2, the left side of a graph as a stock moves towards equal or opposite, in other words 200%, must be jagged. We'll show that in a minute here. A PM200 MACD first time qualifier simply means it is the first time in the stock's history that MACD has moved equal or more and opposite, in other words 200+%. Now note, in some stocks qualify for PM200 MACD several times. We're just trying to get in on the first time it qualifies. So here, the graph below shows a jagged left side of a stock graph. And this is what we're referring to here. This is jagged. This is jagged. It comes up. This is a great candidate. As MACD comes up, it comes down. It's moving down here. It's coming up here. All on the way to 200%. Note the jagged left side of a climb, which is a good thing here. Jagged means the MACD bar is moving up and down towards 200%. And here's a reversal here, showing this particular line. So the bull bear profit trade rules, section 7 here. Stick to the rules of the trade. Focus and maintain discipline, what we refer to as being a computer. Just do what you're supposed to do. Be emotionless and stick to the plan, the trade plan. Make your trade near the close of the market, approximately 12:58 PST. Use market orders to enter the trade. Pay attention to the bid and ask price as well. Using market orders typically executes at undesirable prices, so it is a huge plus if the bid and ask price are within pennies of each other. You want to have your trade or entry price as close to the closing price as possible. The 1% or better profit target research, all our research is based off the close at 1 p.m. PST. Now use limit orders to take profits. Limit orders will help you stay away from personal emotion that could ruin profits. What that's talking about specifically is once you enter a trade and you say on any given day it's 12:59, the market closes within 5 minutes or so. It's not critical like something's going to happen at 6 minutes after, but the point is do it while you're actively entering a trade so you do not forget to enter in your limit order. And as a reminder, limit orders are used to execute a trade, get out of a trade at a specific profit target. So if you're at $5 and your order is at $5.50, which is 1% or more, then you enter in to exit a trade at $5.50. That is your limit order. And also use, if your brokerage account allows, make your order so that it'll execute 24 hours a day. It could sometimes some stocks are very active after hours, and I've had trades execute at 1 or 2 in the morning, which is a fantastic thing to wake up to profits. So use market orders to enter a trade so you make sure you execute the trade, and use limit orders to exit the trade. And this concludes the video on the PM200 MACD method.